I think we've got this 6-year period. That's all we're left with now, where we can really set up our future before the world changes dramatically. Now there's the applications layer. So I think the blockchain layer, just put it in financial terms, we're at what, 2 trillion-ish today? I think it goes to 10 trillion in this cycle, and we end up somewhere, let's say 2035, at 100 to 200 trillion. Right, that trend is a fucking mega trend. Do that one thing. But I don't know how much returns we get from the latter part of the cycle.
It's widely acknowledged that the global monetary system is on an unsustainable path, teetering on the brink of collapse. Financial analysts, economists, and proponents of sound money unanimously agree that the enormity of global debt renders the fiat system obsolete. However, opinions diverge on the solution. While gold enthusiasts advocate for a return to the gold standard, cryptocurrency proponents argue that blockchain technology offers a solution to create a truly scarce, deflationary, secure, and permissionless financial system. Renowned macro analyst and crypto enthusiast Raoul shares the bullish sentiment towards digital assets prevalent among cryptocurrency investors. He views the digital assets industry as presenting a rare opportunity for all types of investors. Unlike many crypto advocates, Pal doesn't foresee an imminent collapse of the fiat system. He believes that governments will navigate through the next phase of the monetary system, aided by rapid technological advancements, particularly in robotics and artificial intelligence. Pal's exponential age thesis posits that AI and robotics will revolutionize productivity, addressing the global debt crisis and fueling GDP growth. He predicts a transformative shift in economics, finance, and investing by 2030, emphasizing the importance of preparing for this paradigm shift. According to Pal, investing in cryptocurrencies offers a means to participate in the growth of a burgeoning industry, projected to reach $200 trillion within the next 6 years.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our crypto cheat guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I really don't understand how it's going to play out. But I do know between now and, let's say, 2030, now, I'm not sticking to that date. It's not like 2030, the date of doom. It's like somewhere around then, we start hitting this economic singularity, which is not the singularity, but it's economic, where we can't even predict how economies work anymore. If that is the case, then I don't know how investing works. So how I'm thinking of it myself, and I'm fortunate to have built some wealth, but I'm not the richest man in the world by far, but it applies to everybody, is I think we've got this period, this 6-year period, where we need to build as much wealth as possible because things are clear. If we've been given the greatest macro opportunity of all time, when everything is correlated and the everything code is driving everything, then let's take advantage of it. Take advantage of it, because after 2030, I don't know what it looks like. Humans are adaptive, and I've talked about this. I think it'll be more about social communities and how we add value to online digital networks, and it's a much longer conversation for another day. So I'm not worried about humanity per se. I'm just worried about the how to yourself bit. I think we've got this 6-year period. That's all we're left with now, where we can really set up our future before the world changes dramatically, and we don't have the everything code anymore. We don't have most of the things we know anymore. Technical analysis, what does it mean? What does portfolio analysis? What does anything mean? What does reading news mean when you've got AGI doing stuff? But one thing I do know is that the digital rails will be how all of this works. Blockchain is how AI, robots and everything else will move payments around. We're seeing all the governments are moving that way. So I don't worry about that. But, at some point we'll get to maturity phase, and the gains that we've made from the adoption phase won't be there anymore. So we need to be involved in the adoption phase of blockchain technologies before it gets to the maturity phase, where the returns are more like utility returns. Now there's the applications layer. So I think the blockchain layer, just put it in financial terms, we're at what, 2 trillion-ish today? I think it goes to 10 trillion in this cycle. And we end up somewhere, let's say 2035, at 100 to 200 trillion. Right, that trend is a mega trend. Do that one thing. But I don't know how much returns we get from the latter part of the cycle, because it's always the first part, right, that you make the real money from. I then think, okay, what bloody assets do you own past 2030? Bonds are trash. Equities have been trash. We don't even know what companies survive. How long do companies last for? I think they're going to be more like meme stocks. They get attention, they die. We'll see companies being built with one person. We won't need the amount of people. So everybody can build companies, and maybe they last. So it becomes like this meme economy, this ICO economy where things rise and fall and the capital cycles are much shorter. I'm concerned, how does VC work in a world where AGI or just AI is iterating product companies' markets all the time? Things kind of blossom and then die. Some rise, but I think much less rise, because you keep getting disrupted. Everybody gets disrupted by each other in this kind of endless cycle. Well, where do we invest beyond then? My general view, and I'll flesh this out in a much broader piece at some point. In the end, I'm actually thinking about, well, okay, where is my long-term savings? Outside your lifestyle bank, outside some property that you use and live in. Where do you hold long-term wealth in an economy that's so disruptive? I kind of like digital art. I think that NFT high-end digital art remains the top of the pyramid of wealth, as art does now. So
Powell's vision for the forthcoming exponential age of technological advancements aligns closely with Cathie Wood's perspective. According to the founder and CEO of ARK Invest, the global equity market cap of 5 disruptive innovations is poised to surge from $19 trillion to over $220 trillion by 2030, mirroring Powell's projections. Both Powell and Wood anticipate that artificial intelligence, blockchain technology, robotics, genomic sequencing, and energy storage will drive significant increases in global GDP, potentially raising the average growth rate from 3% to at least 8.5% after 2030. This optimistic outlook contrasts with economists' predictions of a lower 2.6% average growth rate for global GDP in the coming years. However, both Wood and Powell believe that the rapid development and convergence of these disruptive platforms will fundamentally reshape the trajectory of the global economy. In Powell's video, he elaborates further on the importance of positioning oneself appropriately by investing in cryptocurrencies before this transformative disruption takes full effect in the next 6 years.
I've gone through the story, which you know I've explained it many times to you, how things are. No growth, high debts, aging populations. I've explained that the central banks are debasing currencies, all of fiat, that the entire fiat world peaked in 2008. Which is one of the reasons why since then people are so pissed off, because nothing's working. Some assets have continued to rise, but those are the ones at the center of the debasement of the reserve currency, the US dollar. That's why the US markets look better. But once you adjust them for deflation, for debasement, they look just like the European stock market in dollars. It's all going nowhere. So then we found that, okay, the government understands this too. This is the great thing that I see is like, the government doesn't know what they're doing. The Fed are idiots. They know exactly what they're doing. All the central banks understand the game. The game is, do not let the great baby boomer complex go bust. Do not let the system implode. We have to offset falling trend rate of GDP by higher debts at government level to maintain the economic structure that we have. We can't pay for that, so we have to print money to do it until this population bulge is left behind and we change the structure of economy. So there's the game. So the game is understand that. Forget all the other things that people talk about. It's all fucking noise. It's all mid-curve. Don't mid-curve it. Buy and hold, things go up. The far right of that is they go up because of so much evidence of what they're trying to do, why they're trying to do, and how the economy's broken and what it all means. Everything in the middle, I think, is mid-curving it. And it will cost you money. You will literally not be as wealthy as somebody who just understands the buy and hold strategy in the right assets, crypto technology. So we've got that, thank God. Crypto is the super trend. That is the one, the biggest gift we've ever been given as an investment. You know, I've expressed this so many times to you. You don't believe it when the market's down. Raoul's a moron. Why did he get us into that? Now it's back at all-time highs. So, oh, he's a genius. No, it's the same bloody thing. I just bought and hold. I'm just the moron on the left of the bell curve. Just don't mid-curve it and don't it up. Don't it up means don't try and do things you shouldn't be doing. Just buy and hold a core group of good assets. Knock yourselves out on other stuff. The other thing is, as I said, we've seen this cycle before, the financial repression. We've seen the cycle. Everything is cyclical. Everything comes down to basically two assets. A rich really comes down to one asset. But you need to be involved in technology. You need to understand what the hell is coming because it is going to change everything you do. Whatever industry it is, I don't care. It's going to change. And you need to be prepared for that. So how to unfuck your future gets us from now to 2030. After that, it's a whole new future out there.
Recent data from the U.S. Treasury Department reveals a concerning trend of rapid increase in the U.S. national debt. With $10 billion added daily, the debt has ballooned by approximately $1 trillion in just 100 days. This acceleration marks a significant departure from historical patterns, where it took over 200 years to accumulate the same amount. The implications for future generations of Americans are dire, given the mounting liabilities the country faces, including over $34 trillion in funded obligations and around $200 trillion in total liabilities when factoring in unfunded obligations. Despite these alarming figures, Powell remains optimistic, suggesting that a substantial productivity boost from artificial intelligence and robotics could offer a solution. However, whether this optimistic view aligns with reality remains a subject of debate. Do you share Powell's belief that we can navigate this crisis without lasting damage to the financial system? Your comments and observations on this matter are welcome in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.